Hi and welcome to Trade of the Week. I return to my old stomping ground for this week's trade, the fixed interest market. On Monday I wrote a piece highlighting the heavy issuance programme in US Treasuries due to take place over the week. Bond traders are pretty smart guys and have a good track record of taking prices lower before bidding for stock off the government, otherwise known as mugging the taxpayer. And this time was no exception, with the US 30-year bond trading back at a yield of 470, close to the long-term support of 475. The 30-year bond was the last of the week's four auctions, with $13 billion due for issue on Thursday afternoon. Both the 3-year and 10-year auctions had gone well, with a surprisingly high percentage of direct bids, leading to the suspicion that someone was building a large stake in treasuries. Prices were off the worst levels, but I reckon there was still scope for a low-risk trade here. Although Wednesday's 10-year auction had gone well, prices fell in the aftermath. However, the 30-year bond found overnight support at the same level as Tuesday's minor setback. I'll just show you where that is. Yeah, tied a little line along there. With the price stabilising, I decided to scroll down to a 30-minute chart for my trigger. I was looking for a closing candle above the 21-period moving average, combined with an RSI above 52. And that happened right about here. That gave me an entry point on Thursday morning, buying a £5 bet at 116.04. I placed my stop loss at 115.70, just below the 115.74 support line. On a £5 bet, this gave me a risk of £170. This trade was a play on the auction result, which was due out at 6 o'clock, so I wasn't looking to sell ahead of that. I had a target in mind of 116.90, as that was just below Tuesday's overnight high, but there was scope for a move higher if strong demand combined with a nervous stock market. Let me show you the resistance line. So what happened? The auction result was pretty spectacular, with bonds clearing at a low yield, much lower than expected. The price shot up by around 70 ticks, briefly breaking the 117 mark. I sold £2 at 116.95 and switched to a 10-minute chart to keep a tighter rein on the balance. I'll show you what I sold. There. Bonds weren't able to hold the 117 handle, and I closed out just before 6:30 when a red candle completed a variation on the evening star reversal pattern. The pattern wasn't the textbook one, but there's a strong message that 117.05 resistance was going to hold, especially in an overbought market. I sold my remaining balance of £3 at 116.89. So in total, I made 91 ticks on £2 and 85 ticks on £3, giving a profit of 437 for a risk of £170. Just as a footnote, the price didn't go any lower than 116.64 and is currently trading at 117.36. So there were more profits available for traders that were less cautious than myself. Have a good weekend.